Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, hope you're having a good weekend. Looking at CMG NKE GPRO and Twitter on the daily weekly time frame. So CMG, the bulls are defending this 100-day moving average support 4 days in a row, forming incrementally higher lows. It's still a very tight range. There's a lack of volatility right now, and volume is really not making any volatility appear. So we need to be cautious with options as they do have time decay, and they certainly erase pretty quickly that premium as we do trade sideways. But in terms of the bulls having to prove themselves, the couple levels I'm looking at are the 200-day moving average resistance of 405.48, and then 413 is the level where the bulls would really prove that they have regained daily momentum if we can break this lower high pattern, which has still been in play now for almost a month, about 3.5 weeks. So the 200-day moving average resistance, we can see we bounced off this 100-day support 4 days in a row, but we have rejected from that level. So it's a little bit of a channel clearly forming here using these moving averages. On the weekly time frame, we did close right at that middle Bollinger Band, 402.11. We did hold that level, and we have now held the back test of the weekly middle Bollinger Band 4 tests in a row. So after a month of consolidation, the bulls pretty much have to show up this week, or we are risking the higher low pattern, 397.81, and the must hold 395.08. So watch very closely. If we get another move to the downside, the bears will be taking over in the midterm. And you can see how much downside space is here after 395. There are no moving average supports on the weekly, and there's not a lot of price action building support until down in the 370s. So important for the bulls to show up this coming week with step number 1, getting over the 200-day moving average resistance and turning that into support. NKE continues to favor the bulls as we continue to hold this middle Bollinger Band on the daily, back testing that level, 57.15. Now we just need to break this resistance. 58 is a little double top, and then 58.25 is a little double top. Get above those levels, and we see continuation up towards $60. We have the 2 weeks of healthy consolidation, followed by a big bull week here, and we are looking at the potential for NKE to change the trend, and I do like the NKE bulls as long as this 56.02 level holds. If you want to have a tighter stop, and you're playing NKE bullish, you could exit if this middle Bollinger Band were lost on the daily time frame before breaking that 58 and 58.25 level. But the bulls are buying the dip. These lower wicks favor the bulls heading into this next week, and the upper Bollinger Band is now ascending above that 58.25 resistance next week. So we'll be looking for the chance for the bulls to see a break and continuation on the weekly time frame. GPRO, big gap up, trapped a lot of shorts. And we have a very clear support level to be watching now. The low of consolidation on Thursday afternoon was down at 825, and it was a very clear level. And the low of Friday, we had a double bottom at the low of the day of 826. So that 825 level has now held 3 tests. That is a very clear level in the short term, and as long as the bulls maintain that level, they remain in control. We closed up near the high of the day. It's an inside candlestick heading into Monday, a bull break of 858, and we look to 864. And 872. The daily middle Bollinger Band will have to become support. So we are scouting a bearish entry in GPRO, but not yet. There was a bear entry day trade opportunity on Friday, but the bulls did buy that dip. And we need to be looking for a bearish reversal candlestick on the daily time frame to be confident in any swing bear positions in GPRO. So we're looking for a lower high compared to anything below 975 to keep this lower high pattern intact. And I do believe we will see that because that's still another multiple or a big move to the upside from where we currently stand. And I do believe the bulls will tire themselves out before having the ability to break 975 resistance. So short term, the bulls are still in full control, but we are looking at the overall weekly trend long term and knowing that the bears are in control of that long term trend. It is a very solid bullish reversal candlestick on the weekly. They must see a green week next week to confirm it. The middle Bollinger Band resistance will be in play. That's going to be down around 930. We'll have to update that at the start of this next week. So long story short, bulls still have nice momentum in the short term, but we are not losing sight of the longer term trend, and we're scouting a bear entry in GoPro. Twitter remains weak. The story of the month has been rejections from the exponential daily resistances time and time again. We're on the verge of a bullish MACD cross, but we're going to have to get over these exponential resistances in order to see that play out. So very weak. Support is down at 14.85, the lowest price we've seen in 3 months. And resistance, if we can get over these exponential resistances, will be 15.58, the high of the week. So the weekly time frame is a bullish reversal doji, not a necessarily strong one, as there is an upper wick of profit taking, and we are down hitting lower lows. After 14.85, we're looking at 14.51, and if we start to see some market consolidation, just like with GoPro, we saw some market consolidation, and GoPro really started momentum to the downside. If we see further market consolidation, Twitter is not in a position that the bulls want to be in the sense that we're approaching the all-time low, and the bears have a lot of momentum. So keeping a close eye on Twitter. And right now, the bears are very happy as they have been seeing nice gains for the past month straight. So I appreciate you watching. We'll check back in on Monday. Hope you have a great Sunday. See you soon.